Hello traders, so today we are going to review one candlestick pattern that is well known because of its reliability. It's not so easy to identify and to spot it on the charts, so you'll spend quite a lot of time trading without finding this candlestick pattern on your chart. But once it is found, usually it proves and it offers a good signal to the traders that we are about to have a trend reversal. Either we are reversing in the moment, or the bulls are losing the control. So the hanging man is a bearish candlestick pattern, and it usually is formed at the end of an uptrend. So here we have a dollar yen hourly chart. You can see an uptrend here, and then you have a big long let me zoom in. You have a big long bullish candle here, and then you have a candle that you can see next to this one, the one that I'm pointing to. It's a hanging man candle. You can see, of course, why it's called hanging man. So the price opens at the previous close, then goes lower, starts moving lower, then pushes higher and actually closes at the high. What is important for the hanging man is that it's more or less a hammer candle that is formed at the top, and it means usually it signals indecision for the traders, since you can see here that the price first pushes back downside, and then storms higher and closes at the high. Even though we closed at the high, it offers us a glimpse in what is about to come, since there is a selling pressure. So as long as we have the move to the downside, the first move to the downside, it means we have a selling pressure, even though we in the end closed at the high. So it's important not to mix it with the doji candle. Doji candle has a wick to the upside and to the downside. So this will be a doji candle. So the difference is that the doji closes usually around where it opened, but the hanging man must close at the very top. So you can see, as I said, this candle, when you look at it, it's a bullish candle, but it signals that it's an early indicator that a sell-off may be coming sooner rather than later, and the bulls are losing control. So as I said, it's from at the end of an uptrend. So here we have an uptrend, and then you have a hanging man, and then you have a push to the downside, first push to the downside, and then second push to the downside, and we start creating new lows, we start creating new highs, which means that we are in the process of creating a downtrend, and more or less everything started with this hanging man candle. So this formation is easily identified usually in the intraday charts, and it's very much used by the day traders. If this pattern is found at the as I said, if this pattern is found at the end of a downtrend, then we call it a hammer, and it's a bullish reversal pattern, meaning that the downside is finishing, and the bullish or the bulls are regaining control of the price action. Here is another chart. So here the dollar yen, we talked in a 1 hour chart. Here is another chart, it's a euro dollar chart. This is a daily chart. It's rare to find a hanging man on a daily chart, but here is an example of this. So again, we have an uptrend, we create lower lows and higher highs, and then at the again, as it was the case with the dollar yen, we have a long strong healthy bullish candle. Then we have a hanging man. Look at this candle. Even though it has a very small uptick, we can tolerate this, but we push all the way to the downside. So if you look where we close, so we close at 150.31, but we push to 149.45, so almost 100 pips we push to the downside, but we still manage, before the candlestick has been formed, we still manage to push higher and close at the top. As I said, even this would look very healthy if you're at the bottom, but since this happened at the top of the trend and we have a long wick to the downside, usually we're followed by one or two red candles, bearish candles, and then you have a new high. We go to the new high, we closed at the lows, and then this is a definite confirmation. This red candle follow up of the hanging man is a definite confirmation that we are going to start a downtrend, that we are going to start to push to the downside. And from this point, if you only look from the point of the hanging man, then we have 400 pips move to the downside. So hanging man cannot be traded immediately, so you cannot really enter the trade here, because as we can see here, we can go and create a new high. But as I said, it's an early indicator, early warning sign that the uptrend is coming to an end, and is either we're going to have a correction or we're going to actually completely reverse the price action.